Hello, and welcome to Mukoye Finance. My name is Zaradeen, and I'll be your tutor in this class. In this tutorial, I'll introduce you to the concept of banking in Nigeria. From a layman's perspective, a bank is where you keep your cash until you withdraw it or use it to pay bills. It can also be the place where you get a loan to start a business, buy a car, or buy a house. For example, if you're running a small business, it may be where you go to borrow money to expand or improve. So why do we keep money in the bank? The main reason why majority of people put their money in the bank is for safekeeping, so they don't lose it. The bank's security measures will keep your money safer than it would be under your mattress or in your sock drawer. Other reasons why people take money to the bank is so that they can earn an extra income for their money. Beyond keeping your money safe, some bank accounts also pay you additional income, so it pays to keep any unneeded funds in those accounts instead of keeping it at home, where it will earn nothing. From a theoretical perspective, a bank is a financial institution that is licensed to accept deposits, make loans, and provide related services such as currency exchange and settling transactions. Banks essentially match up savers and borrowers, and by doing that help ensure that economies function smoothly. For example, if you have 1,000 naira you don't need for say a year and want to earn income from the money until then, or you want to buy a house and you need to borrow 100,000 naira and pay it back over 30 years. It would be tedious for someone acting alone to find either a potential borrower who needs exactly 1,000 naira for a year or a lender who can spare 100,000 naira for 30 years. This is where banks come in. Their primary role is to take in funds called deposits from those with excess money, pool them, and lend them to those who need funds. By doing this, we can say that banks are intermediaries between depositors who lend money to the bank and borrowers to whom the bank lends money. Conventionally, the amount banks pay on deposits and the income they receive on their loans are both called interest. Both depositors and borrowers can be individuals like me and you, households, financial and non-financial institutions, as well as national and state governments. Individuals, businesses, and governments also need to move funds around, for example, from buyers to sellers or employers to employees. Banks play an important role here by facilitating these transactions. There are 6 major types of banks in Nigeria, and they are commercial banks, merchant banks, non-interest banks, microfinance banks, primary mortgage banks, as well as payment service banks. All these banks, except for non-interest banks, carry out what is regarded as conventional banking service. I have made separate videos for you explaining how each of these banks operate, and these can be found on my pages and channel. It should be noted that no person or legal entity is permitted to carry out banking operations legally in Nigeria without being issued and granted a valid banking license under the Banks and Other Financial Institutions Act, BOFIA 2020. It is therefore important to understand the permissible and non-permissible activities of each banking license in order to determine which type of bank to approach for specific transactions, and also flag any contraventions in terms of the banking license type. And this brings us to the end of this video segment. If you have learned anything new today, please drop a comment, like, and subscribe to my channel in your quest towards understanding banking services in Nigeria. See you in the next video.